Okay, right. So guys, very good afternoon to all of you. Let's start the class then. So today, guys, our focus will be on what you can say. Yeah. So guys, today the focus will be on what you can say consolidated ratio, right? Let's try to do, guys. I think so far in class I have done, I think, one consolidated ratio. Let's try to do another 2 to 3 in today's class. So I think this would be today's final class, guys, when it comes to FR, right? Okay, so guys, regardless, could you take out your exam kit and please go to a question that says over here. Now, I know that I did start a question half, but I didn't evaluate. We'll do that also, right? So we'll start off with a fresh question, guys. Could you please go to this question that says room corporation, VROOM. In your exam kit, one before the last question. Okay, one before the last question, right? Go to that part, guys, over there, one before the last question. And also, guys, remember, I hope you all attempted the pre-mock exam, right? Yesterday I finished off the recording for the pre-mock, so it should be available to you with the discussion. If you haven't done that, please do that, guys. It's a very relatively easy paper, and questions similar to that can come in the exam. Okay, so please do try that paper. Okay, right. So guys, take your exam kit and please search for this question, guys, over here. Room corporation. Yes, most probably this will be the final because I'm having a small family commitment, so I don't think I'll be able to make it to class in the next few days. That's the reason why I took the class today, because tomorrow I'm unable to, right? That's the reason. Okay. Okay, so guys, can all of you guys go to this question over here, 447, room corporation, right? A latest past paper question, right? Go to that part, guys, quickly, right? Room corporation 447. Okay. Right, so guys, when you're doing on the laptop, guys, please take out the Word software, because in your exam it will be a blank space, right? So in the pre-mock, I'm doing it on the platform itself, so you see that it's a blank space over there. Right, okay. Now guys, look at the question what they're asking. Right. Right, so let me guys first write here and keep then. Okay. So guys, put the heading then, room corporation. Okay. Right. 447. Okay, requirement A. Okay, requirement A is they are asking for you calculate the goodwill. Okay, so first question, guys, what they're asking is to calculate goodwill, right? Can you guys quickly write down the goodwill equation, right? Goodwill is equal to, right, investment slash consideration, okay, right, plus fair value of NCI, okay, minus net assets, right, at acquisition, which is working number 2, and this will give you goodwill. So normally, guys, for net assets at acquisition, we have to open a separate working. You understand? Normally when we do the SOFP, this answer is readily available. Okay, whereas, guys, on the other hand, what you can say is that, right, if you are doing a ratio question or maybe a consolidated P&L, then this answer is not readily available. We have to calculate it. So to calculate it, one, guys, can you separately now put down over there, right, working, right, right, and guys, can you mark it over there and show it to me as net assets at acquisition date? Okay, net assets at acquisition date. So today, guys, full class we will be doing ratios only, because I have done accounting standards, right? Financial statements we have done quite a lot. Okay, in the pre-mock recording also, guys, there is a consolidated P&L, right? So you can just watch that as well. Okay, right. Now, guys, first of all, I will give you all 5 minutes time. Once you are done with the equation, I'll give you 5 minutes time. Okay, from this paragraph, whatever that you can take, can you guys start marking, guys, over there faster? Okay, So Amjad, what you should do is like this. Now you can just type it this way. Now yeah, you just type in Google pre-mock exams, right? And it will take you to the let me show that to you. I'll show you where you can find it. Okay. Right. So guys, the others, can you read the first paragraph? Don't take that long. 3 to 4 minutes. Can you quickly mark whatever that you need? Okay. Please mark guys over there whatever that you need from this question. Okay, so guys, have you all done with the first part? Shall I mark the answers, whatever that's relevant? Okay, now guys, see. On 1st of January 2003, Rome acquired 80% of Sleek's 100 million share capital. Guys, now note that one. 100 million share capital is something that I need for my net assets at the acquisition date. Guys, now listen. Now, normally net assets at acquisition date, there are a few constant things in exams. What are the things? Share capital, okay, retained earnings, and also guys, fair value adjustments. These are the things. So now they have said the company has 100 million share capital. No, so this will come guys over here as share capital as net assets at the acquisition date. Okay, are we guys all okay with this one? Right, then what happened? Sleek Corporation is a company that specializes in electric vehicles. What are we? We are a company who is normally selling vehicles. These people are electric vehicles. Okay, right. Room Corporation paid cash 650. Guys, when you pay cash, it's considered as what? Investment, right? Consideration, the amount that you pay to buy your subsidiary. So guys, let's mark it then and show guys over here, right? Investment in this one. So I'll write it down. Cash investment. How much guys we have invested in that one? 650 million we have invested. Okay. Then guys, next one, going further, right? And will pay a further cash of 300 million in January 2006. This is after 3 years. If Sleek meets a certain performance target. Guys, now don't mix these two up. This is not deferred consideration. Deferred consideration means what? We will make the payment in the future regardless, right? If I tell in 3 years I'm going to pay you this much, I'm going to pay you this much. There is no strings attached. But over here, guys, what's going to happen? They will pay that much if they meet a certain target. This is what we call contingent consideration. Contingent consideration means only if you meet a specific target, you're going to pay. So they're going to pay in 3 years, 300 million. On 1st of January, on 1st of January means what, guys? The day that we are buying the company, the fair value of the 300 million consideration due to be paid was 210 million. And on 31st of December 2003, it was 160 million. Guys, now see what happened. You're planning to pay 300 million in 3 years' time. Yeah, very good. It's a contingent consideration. Good. Okay. So we are planning to pay, guys, 300 million in 3 years' time. At the date of acquisition, the fair value is 210. At the end of the year, the fair value is 160. Now, these are points that you should use for evaluation. Okay, once again, guys, in 3 years' time, how much we are going to pay? 300 million. But the value of that at the date of acquisition on January 2003 is 210 million, it seems. But that went down by 50,000 at the end of the current year. So think of these. So therefore, guys, under investment, I should write now. Start copying, guys, with me. Contingent consideration. Okay, right. Now, guys, there are three values now: 300 million, 210 million, 160 million. I should, guys, mark here 210 million. You should mark the value of the consideration at the acquisition date, which is 200 million. Sorry, 210 million actually, right? So you have to mark that one. Okay, are we guys all okay with that one? So there only you have to mark. Okay, guys, apart from that, I do not see any other number that I need for my calculation for goodwill, right? There is no other number that we have to take. Okay, right. Then, guys, here they have given some numbers. I don't think this will impact the goodwill. Okay, right. Guys, now can you do me a small work? Okay, read number 1 and 2. Start marking the numbers and get me the goodwill faster. Okay, please read Roman number 1 and 2. There are some more numbers that we need. Take them and finish off the goodwill and show it to me, guys, faster. Please finish off the goodwill and show it to me. Everything is provided, guys. Only NCI value you have to calculate. Right? Only NCI value we have to calculate. Sure, Ishma, 1 minute. No, that's not the value of the NCI. Value of the net assets, let me check and see. Mm, okay. Let's check on those. Right, okay. So guys, the others now who are doing the question, little bit check and see guys how is things going for you. Okay, first one. At acquisition, the retained losses were 80 million. Because normally when we buy a subsidiary, they always have retained earning, profit. But these people have a retained loss. So guys, here you should mark it and show as minus 80. Make sure guys you have marked it over there. Minus 80 for retained earnings. Sleek also had unrecognized intangible asset at a fair value of 250 million. That means like this, guys. Okay. Sleek has an internal intangible asset. Okay. Sleek company has an internal intangible asset. Now, internal intangible asset means Sleek can't recognize now. According to IAS 38, internally generated intangible assets we can't recognize. That's why they are telling unrecognized. But now room, we are buying Sleek no. When we buy Sleek, for us this becomes what? Purchased intangible asset. So we can recognize this. So there is a fair value of an intangible asset that is 250 million. So guys, let me mark that over here. Done. Okay. Right. Then guys, what's going to happen over there? The non-controlling interest is measured at fair value. The share price of Sleek is 6.8. Guys, listen, how to value your NCI. Now look at the working that I'm going to do. Now they're telling it 6.8 per share. Guys, NCI in our company is how much percentage? 20%. 20% of how many shares? 100 million shares. Okay. How is it 100 million shares guys over here? Now can you see this part guys here? See, right, they have a 100 million share capital now guys, right? So therefore out of 100 million shares, 20 million is our one, or 20% is our one, and this will help you to guys identify what's going to be the fair value. Yeah, what I mentioned was like this. Now see, Sleek has an unrecognized intangible asset. What does it mean? It's an internally generated intangible asset, right? Unrecognized. Now usually according to the standard they say if there is an intangible asset that you generate internally, you can't recognize. So Sleek cannot recognize because it's an internal one for him. But now think this in the parent's point of view. Room, now Room is buying Sleek, no? That means for Room this becomes a what asset? Purchased intangible asset, because he's paying for this also. That's why we can recognize this and show when we calculate goodwill, right? For the subsidiary, it's an internal one. He can't mark it in his financial statements because the standard doesn't allow. But for parent, he is paying, is buying Sleek. That means it becomes a purchased intangible asset. So we can recognize this and show. This is what I explained. Yeah, so that has to be the correct answer. Rimas, earlier also you sent me the correct answer. I didn't check on that one. Yeah. So therefore, guys, it's going to be 136 million, it seems. That's it now, guys. Do we have any other answer over here? Then, guys, on the other hand, yeah, that's it now, guys. That's the only number I think that we should take. Okay, now, guys, first, can you work this out for me, guys, faster? Right. Now, first work this out. Okay. So therefore, guys, the net assets at the acquisition date, we are getting the answer as, guys, how much over here total? 350 minus 80, 270. I think someone sent me 270 as the answer. Yes, correct. 210 is the value at the acquisition date. Okay, 300 million is future value. I think Amjad, you sent me the answer. That answer was correct. Okay, now guys, take the 270 and guys now mark it over here faster. Minus 270. Right, now guys, can you please get me the answer for goodwill? 650 plus 210 plus 136 minus 270. Yeah, very good guys. Goodwill of the company is 726 million. That should be the answer. Good. 726. So guys, first thing, you total the net assets and take it over here. Then at the investment, at the fair value minus from net assets, then guys you will get the other answer over there as 270 million. This should be your answer. Okay. Right now guys, are we all okay with this part? This is how to calculate goodwill. Right now guys, look at the next question what they're asking. Right. Using the pre-formatted table provided. Now this, since this is the exam kit question, the table is not there, but maybe in your real exam a table might appear like ratio, room group, room individual, like that a table will appear. Right, they are asking you to calculate the ratio for 31st of December 2003 and 2002 for the group and individual statement respectively. Guys, again see, calculate. No need to adjust anything. No need to add or subtract anything. Just what you should do, you have to just what you can say, guys, just copy the numbers and get me the ratios. Okay, now guys, put the next part over there, part B. Yes, Sandra, it has to be a past way, but I can't remember which year that is. Okay, right now guys, mark that one over there. Right now, requirement B. Okay, let's now calculate the ratio. So guys, I will draw a small table over here. Okay, right, as ratio, right. Right, then guys, formula. Then we have, what are the things they're asking guys? Room group. Okay, right, and also guys, on the other hand, they are also asking room corporation. Both they are asking. Okay, so guys now notice this, room group means what? Consolidated financial statements. Room corporation means individual financial statements. So technically you're comparing an individual financial statement with a consolidated financial statement, the performance. No, don't need to draw the table in the exam. They will be giving you what you can say, a pre-formatted table. That means the table will appear. You just have to keep on typing only. Okay, they won't ask you to draw the table. Okay, now guys, let's start marking then. First they want gross profit ratio. Okay. Okay, then guys, on the other hand, they want operating profit ratio. Right. Then we also need right ROCE. So guys, I'm writing the formula because it's more easier for me when I have the formula. Gross profit divided by revenue into 100. Okay, right. Then guys, on the other hand, when it comes to operating profit, guys, what's the equation? Right. Operating profit divided by revenue into 100. Right, then guys, on the other hand, ROCE, operating profit divided by revenue, not revenue, divided by capital employed into 100. Right, so these are the equations guys that we have. Okay, right, so guys, copy down the equations. Right, and now I'm trying to show you guys numbers as much as possible. Yeah, this is the maximum. Okay, can you guys now quickly calculate the ratios and show it to me guys? I'll give you, no need to mention the formula, right? But I prefer to normally do it because it's easier for me, right? But it's not compulsory.
Both operating profit and ROCE, we should get the operating profit and profit before interest.
Profit before interest and tax. Right. Now guys, on the
Net profit calculation.
Net profit means profit after interest, and after taxes.
You have to take
Profit for the year, profit after taxes. Okay, right now guys, here I have given you the numbers. Right, now the thing is I'm unable to show you all, as we'll see, will you? Okay, right guys, can you start calculating for me guys these answers quickly? These are maximum guys, I can zoom. right? Because if not, what happens is some of the numbers get cut. That's why. Okay, so I'll give you 5 minutes. Start calculating for me, guys, all the ratios quickly. Yeah, Daniel, all the answers are correct. Huh? Yeah, Asya was a good. Answers are correct. So guys, I see most of you all have already finished off your answers, and let's see, you have sent it to me over there. Let's see Basil's answers. Okay. Also, can little bit check on your ROCE only, right? Only that. I think the rest should be okay. Just check on the ROCE only. Yeah, guys, I'll now mark the answers. I feel like all are now doing good. Okay, so guys, first one, I need the gross profit. Gross profit is 2,300 divided by 13,450 into 100. Whereas guys over here single entity 2400 into 12,000 divided by 12,200 into 100. Over here guys what we have operating profit which is going to be right 730 divided by revenue 13,450 into 100. Over here guys we have 940 divided by 12,200 into 100. Right, then guys again operating profit 730 over here guys operating profit 940 divide this one also guys divide capital employed here guys that link capital employed 33,670 into 100. Here guys it's going to be 31,450 into 100. Right, okay. Right, now guys according to the students who have sent me the answers are going to be no you can show preferably better to show. Okay, right. So guys the answers are 17.1% over here, where guys over here the answer is going to be 19.7%. Okay, then guys over here the answers are going to be how much? It's going to be 5.5%, and over here it is 7.7%. Right, return on capital employed guys the answers are 2.2%, and also over here 3.3%. so these are the answers guys what we are getting. 20%, yeah, you can round it off if you want, no problem. Yeah, it's always preferable to show this one how you're getting the answers. It's always better. Equation no problem, but this one better to show. Okay, okay.
ROC 3%.
It's coming as 3. 1 minute guys. 98. 940 divided by 31,450 into 100. 2.9. Yeah, so guys sorry, it's 3%. This has to be 3. Correct. Okay, guys now you all read the first paragraph. No, okay, now guys can you start reading these points, because now what are they asking in this paper? Analyze the performance of room group and room corporation, both they're asking you. Okay, can you guys first take a few minutes time and now guys start reading this one for me faster, these points over here, then we can now start the evaluation. That's not an issue, that's not a big this one. Okay,
Recording in progress.
okay. The thing is this, since they are not specific regarding the rounding off, it's not a problem. Okay, because they are not specific about the rounding off, it's not an issue. You can go with whatever that's preferable to you. Okay. Okay, all good guys. Now have you all read all the points? Okay, shall we then start evaluating? Okay, right. Guys, let's start with now. First one was gross profit ratio. No, okay. Can you guys quickly give me a comment about the revenue faster? Give one line comment for me faster. Okay, we'll start off with this one. Okay, so let's start with. Okay, I'll just push this to down table, down page. Okay, right. Can you guys quickly give me now? Put the heading guys over here. Then we'll start then. Right, put the heading performance. Right, put the heading performance. Okay. Right. Can you guys first mark it over there for me as this one over there? We have revenue. Okay. Guys, can you comment about these two faster? Revenue. That means can you comment from here to here? Right. What has happened and why? Give me two reasons if possible. Okay. Revenue has increased. Can you tell me why? Two reasons. Okay. Okay. Now guys, revenue has increased. There were two reasons why revenue has increased. Can you guys tell me what is the one reason why the revenue has increased? Yeah, very good, Daniel. Such three answers are correct. Okay. Uh, yes, exactly. Okay, guys. First of all, tell me 2002 is room single entity, one person's answer. This is room consolidated. Consolidated means guys whom and whom? Parent and subject. So of course, no guys, there is going to be an increase in revenue, no, because 2002 is single entity performance. 2003 is two people's performance. So with the acquisition, definitely in consolidation, Sleek's revenue is also there. That is one reason why it has increased. What is the other reason, guys, why it has increased? It's over here. What is the other reason why our revenue has gone up? Because of what? Correct. Good. Yeah. What is the other reason, guys, why they are specifically telling you? In plain words, they have said you why the revenue has increased. Yeah, that's the answer. That's correct. Yes. Guys, look at the last point. Room Corporation has launched a range of after-sales services due to lower repairs. These have been very profitable, right? So that new strategy has increased in sales. Okay, so shall you guys start writing down over there? Okay, let's mark this one then. Why the revenue has increased? Okay, guys. Now itself we can't touch on this global market thing. Huh? Now itself we can't, because you know why, guys? As a decline in global sales, we took a decision to invest in Sleek in relation to the research. Still, it's in the research phase, guys. It's still in the research phase, right? Okay, right. So guys, then let's start marking guys over there. Then revenue, right? So the reasons, guys, why revenue has increased. So you can start. Revenue has increased, right, over the year, right, due to, right, the due to the acquisition of Sleek in 2000x3, right? So guys, I'm getting short points only, right? 2000x3, and also, right, right, Room Corporation has launched a range of new services which has boosted revenue. Services which has boosted revenue. Done. Right. So we can tell that as the answer. Okay. Right. So guys, now you all are okay with those 2 points now? Okay. But guys, what happened? Now look at the gross profit. Yeah, you can include the increase in percentage, no problem. Okay. But guys, see, if the revenue increases, what should happen to the gross profit, guys? Gross profit should technically increase. But guys, now see over the year what has happened, right? Room Corporation gross profit is 19.7%, but over here, guys, the answer is going to be how much? 17.1%. These are the two answers what we have. Okay, right. So individually we were having 19.7, but even with the acquisition, guys, what has happened, the answer has gone down to, guys, 17%. Can you guys give a comment about that part quickly? Okay, start commenting on that one if possible. Okay. Yeah, we can tell that as 1 point. Good. Yeah. Yeah, increase in cost of sale. Yes, cost of sale has gone up. Correct. That was a we can tell. Right. Okay. Guys, any specific reasons on why the cost of sale has gone up, guys, over there? What are things that we can tell? No, decline in global sales means the revenue has to fall. No. Okay. That one, the revenue has to fall. Yeah, very good. We can add that as a point, Shahla. That answer is correct. Okay. Right. Now, guys, let's start commenting on the other part over there. Right. So, see, right. Though, right. Right. The revenue has increased. Right. The gross profit has declined over the year. Right. Though the revenue has increased, gross profit has declined over the year. Right. This could be due to the increase in cost of sales being larger than the increase in revenue, right? This could be because the increase in cost of sale is larger than the, now here, guys, cost of sale actually has increased. So now see here, revenue, guys, from here to here has only gone up by some 1.2 million, but the revenue, guys, but the cost of sale has gone up by 2 million. So the revenue cost of sale going up is a little bit more larger than the revenue going up. Okay, that is one thing that you can tell, right? Right. Then we can tell potential reasons could be, right? Potential reasons could be, okay. Now, guys, one student has pointed out for me is because of this research. Right now, here, guys, now you can see, according to point number 4, telling that our company Sleek Corporation, the subsidiary, has been engaging in research. So normally, guys, in accounting, research is always what? Expenses. No, this could have been charged to what you can say cost of sale. So we can start writing, guys, potential reasons could be number 1, right? The research expense being charged to, right, cost of sales. That could be one reason. Yeah, there's a lot of research. Correct. Good. Okay. Right. So, guys, remember we are investing in 2 researchers, right? We are investing in 2 researchers. No, here they are telling it's being profitable. No, so we cannot tell that particular sentence. Okay, because they are telling it's going to be profitable, we are unable to use that point. Okay, guys, can you remember in this question we have a intangible asset newly? Can you guys look at this part over here? Can you see There is an intangible asset of 250 million. Guys, normally when there's intangible asset, what can arise newly? Amortization. No, there is an amortization now. So the amortization, guys, could have been charged to what you can say, guys, cost of sale. So we can write. Yeah, after that point, we can again repeat again if we want, because we don't know exactly where they charged. No, that's a potential reason. They could have charged this to here. Okay. So next one, guys, you can tell amortization, right, for the newly recognized, okay, for the newly recognized intangible asset. Intangible asset. Exactly. Intangible assets, guys, being charged to cost of sales. Okay. Apart from that one, guys, are there any other reasons that we can speak about when it comes to here? Right. I don't think so, guys. Those are the maximum amount of reasons that we can talk about. Okay, right. Then, guys, let's move on now to the operating profit fast. Okay, let's move on to the operating profit, guys, quickly. Okay, can you guys give me a quick comments about operating profit? So it has fallen. Now, guys, can you start writing for me the reasons on why it has fallen this way, guys, one by one quickly? Okay, please start writing the reasons on why it has fallen one by one. Yeah. Yes, very good, Asiya. Yeah, Shasha, that's correct. So, guys, I believe you can give up to 3 or 4 points on operating profit. Okay. Guys, I'll give you a small help. Try to use this information in the first paragraph. There is something over here also where you can talk about it. Okay, there is something over here also you can talk about it. That contingent consideration, the value keeps changing. No, you can talk about that also. Right. Okay, start writing the points, guys, for me over here. Yeah, we can regarding that part, we cannot tell exactly, because now they are telling in that paragraph that after sales service arrangement is profitable. No, so profitable means the revenue is much more than the cost. So therefore, better to not to use that part. Okay. But can you guys write up to 4 or 5 points why the operating profit has fallen? Lot of points are over here only actually. Okay, right. Start marking these, will you? Right. Yeah, you can tell that, Daniel. That you can tell. Okay, let's see, guys, what are the other ones? Yes, Asya, you can tell that one. Yes, Amjad, you can add that point. Yeah, you can potentially tell that, but usually amortization, we normally take it to cost of sale. Okay, so better to avoid that. No. The thing is this. Sleek cannot recognize the intangible asset. Only the room corporation only we can recognize. Only us only can recognize, because for its purchase, for them it's internal. They can't recognize that. Okay. Let's see, guys, any other points? Yeah. Okay. Guys, normally remember when you do the patent part, guys, it becomes an intangible asset. Okay, it does not what you can say affect the expenses section. Okay. Yes, that's Sajri, you can tell that part. That is correct. Muad, you can use that point, no problem. Uh, no, we don't need to, okay. We don't need to go that far, right? Regarding the grant. Okay. Okay, right now, guys, shall we then start commenting? Okay, now guys, we can start writing it this way. Okay, now guys, can you check your answers and see guys fast over here? And yeah, and also a student, yeah. Yeah, so guys, and we can, guys, I think most of you did mention this point earlier, but I never looked at it in that angle. Okay, it's just now clicking to me, right? Most of you did say about this part. In face of declining global sales, Rome recently undertook the decision. A lot of you did mention this point, but I didn't see it in this particular angle. Guys, can you add this point on top fast a little bit over here, right? Right, decline in global sales, right? In global sales, because students sent it to me only, I'm checking on this one, right? Declining global sales, right, could have, very good point, right, could have reduced margins per product sold. Okay, margins per product sold. So guys, our revenue has gone up, not that no, but though the revenue has gone up, the margins that we are making is quite small. Now sometimes guys, you can sell 100 products and still make less profits, no, right? So because the declining global sales, maybe you reduced your price, sold more, so the sales is more but not enough profit, the margins are less. Okay guys, now when it comes to operating profit, can you guys little bit check and see guys on the operating profit card? Now I can give you these answers guys over here. So let's start. Number one, right, operating profit has reduced, right? This could be, right, due to, right, we can start writing. Okay, first point, decline in gross profit ratio, decline in gross profit, that's first point. Okay, right. Sleek has an operating loss, has an operating loss of 170 million, because guys, in consolidated accounts, Sleek's performance is also there, no? Sleek already has an operating loss of 170 million, right? So he has an operating loss of 170 million. So we can add that point if needed, right? Sleek has an operating loss of 170 million, right? Then guys, what are the other points that you can take, right? Then on the other hand, right, the business is engaging in, right, engaging research projects, right? So I know that I explained research earlier because I'm not sure about the company policy, whether they're charging it to cost of sales or whether they're charging it to expenses. So when there is a research, when we charge it to expenses, our operating profit guys will definitely go down. Okay, right, that's one thing. What are the other things guys that we can mention over here? Right. Now this question guys, we are doing for 2003, you know. Okay, right. Yeah, and on the other hand guys, you can, yeah, exactly, the contingent consideration part, and you can also write over here, right? Right, but it should be noted that contingent consideration has declined over the year. Okay, contingent consideration has declined over the year. Okay guys, now see, when I started the year, contingent consideration was 210 million, but when I'm ending the year, considering contingent consideration is how much? Only 160 million. So we have 50,000 gain. See, even with this gain, our operating profit has still fallen over the year. But on the other hand guys, you should also remember, now this Sleek company, tell me, as it stands now, how are they doing? How does their future look? Do you think their future looks good or bad? What do you think guys over here? Right, look at these projects that they are involving in. How does their future look good? Does it look good, guys, going forward, Sleek Corporation, the future? What do you think? Yes or no? It looks good. That means next year, this contingent consideration can go up in value. So then our expenses will increase. So then our next year operating profit might fall down even further. Now this year operating profit is good because contingent consideration, we have a gain of 50 million now. But since the company is doing well, it looks as if they might reach the target. If they do reach the target next year, our operating profit will fall even more than what it has. So that's something that we can comment on. Okay, yeah. So now guys, can you start marking over here, right? But since, right, the research project has been successful, right? Right. And their self-driving project also looks promising. This could mean that the future of Sleek Corporation does look sound, meaning they will achieve the contingent consideration target, which will result in our operating expenses going up further in the next year. Okay, so you can speak about that part. Contingent consideration going down means it's a good thing for us, then we don't have to pay for these people, no, right? So it's like a gain for us. Yeah, the targets are not met exactly. I mean, yeah, kind of correct. So it's a good thing and a bad thing both. Okay, it's a good thing because our expenses are going down, but then on the other hand, guys, it's a bad thing because we bought the company thinking that their future is good, no, right? So it's a two-side thing, right? Guys, next one, let's move on to ROCE, guys. Let's move on to ROCE, right? Can you guys give a comment about ROCE, guys, quickly for me, right? Please give a comment about ROCE. It has fallen. Why it has fallen? Now, guys, can you start writing for me, guys, over here faster? Please start giving me points on why the ROCE has fallen. Okay, right. Start commenting about those, please. Yeah. So now state reasons on how the capital employed went up, like that. Okay. Okay, so guys, let's check and see what are the points that you have given. Uh, okay, wait. Wait, yeah. Hmm. Okay, so we can't exactly tell that we took loans because the question does not specifically tell. Maybe like generic points there we can give, but specifically it's not there. Mm, yeah, Amjad's points are okay. Yeah, Shafra, that's good. Sazri's point is okay. Okay. Right. First of all, guys, can you tell me ROCE has fallen? What's the main reason, guys, behind the ROCE falling down? Because first of all, guys, what happened? Our operating profit has gone down. That's the main reason. So let's start marking, guys, over here ROCE, right? ROCE has reduced over the year. Over the year, right? Factors could be number one, decline in operating profit for the reasons mentioned above. Okay, decline in operating profit for the reasons mentioned above. So that's one. Okay, then increase in capital employed, right? Increasing in capital employed, as over the year we have acquired Sleek. Therefore, Sleek's equity and liability has been added to the consolidated statements, right? To the consolidated statements, right? Because guys, capital employed means equity plus liability. No, so this liability, Sleek liability plus our liability both together. Equity, guys, we have Sleek's equity as post acquisition reserves. Okay, and also, guys, on the other hand, we can tell the addition of NCI. Now last year we have only individual performance, no, but this year if it's a consolidated performance, there is a NCI when compared to last year, which was not there. Okay, addition of NCI. Okay, non-controlling interest, right? Right, then guys, you can tell recognition, right? Recognition of brand name. There was a brand name, no, guys, if I'm not wrong. Yeah, recognition of intangible assets. Because, guys, when there is an intangible asset, assets are increasing, no, then the equity also, guys, will increase in that case. Okay, intangible assets. Right, what are the other things, guys, that we can speak about over there? Recognition of intangible asset, that's one thing. So, guys, recognition of intangible assets means we can speak about this intangible asset and also this one, right? The development project, that's also intangible asset, no, right? Yeah, and also, guys, over here we can tell on the other hand, recognition of contingent consideration, right? Recognition of contingent consideration. Because like how a student said me in the chat box, it's a liability, so we have to pay, so then our debt capital is going up. Okay, recognition of contingent consideration. Done. Okay. Yeah, what the section C pre-mock I recorded yesterday, so that recording should be available to you all soon, maybe like today, tomorrow. Okay, so I think hopefully by today, so then you can check on that. I did both the questions on that. It was a PNL and ratio. I'm not sure on that, let me check and see. Okay, right. So guys, any other points that we can give guys over here for ROCE by any chance? Any other points that we can give? It looks like guys we have covered everything, no, for ROCE also. Yeah. Okay, now guys, last part. Shall we guys quickly? Yeah, that is then operating profit now, because if you are in a research, operating profit will go down now, right? So that one we have mentioned over here, decline in operating profit. Okay, guys, last part, conclusion. Okay, right now guys, let's finish off with the last part over there, right? Conclusion. Okay, right. Conclusion. Okay, guys, can you tell me, purchasing Sleek, was it a bad idea? Yes or no? What do you think, guys? Okay, conclusion wise. Okay, what do you think, guys? Is it a bad idea that we have gone and bought Sleek Corporation? What do you think? Yes or no? As it stands, actually, guys, yeah, very good. Answer is no, because see, we anyway knew that, see, Sleek Corporation seems anyway they are a loss-making business. Here, guys, see, they are anyway making losses. So it seems to be a known fact that Sleek is a loss-making operation. But guys, did we ever buy Sleek for the profitability aspect? No, because we had a long-term plan. What's a long-term plan? There is a decline in global sales. So we are selling vehicles, it's declining gradually. So short-term, our business is not going to work. So the main reason why we bought that Sleek Corporation is because to invest in new technology, it made use of, right? There are new projects what they are doing. To invest in that only we actually bought them, because actually their future projects are looking promising. Already one of their projects went into development. So meaning in the future this is going to work. And also the self-driving one is already in research. It looks promising as well. So though in the short run, it may look as if Sleek is profitable, it's not a problem, because we didn't buy them for short-term solutions. We bought them for long-term purposes only. So therefore, the acquisition of Sleek as it stands, it looks good. Okay, so therefore, guys, let's write the conclusion over there, guys, over here, telling that, okay, right. Sleek Corporation, right, seems like a business, right, with a history, right, history for losses. That should not be an issue, as Room Corporation never purchased Sleek with the intention of increasing profitability immediately. Right. Immediately. Right. Its main purpose was due to the decline in global sales to shift to a new market in the future. Therefore, through the acquisition of Sleek, this can be done in the long term. Right. Already one project has passed to development, while the other is still in research. While the other is still in research. Right. As the projects do look promising, the long-term benefits can be derived. Okay. Yeah, 1 minute, guys. I'll zoom in the conclusion. Wait. Right, so guys, with this, let's start another one question. I believe there's another one question that we have to finish it off, right? I did the calculations, but not the discussion. Let's start that one, guys. Once you're done with this, I'll give you all 2 minutes. Okay, right. Guys, this is the other question that I started. Let's do it until 4 o'clock and then I'll give you all the break, guys, after that one, right? This question, guys, over here, right? Okay, this part. Okay, now guys, since we did this question a few weeks ago, what I'm going to do is, guys, from the marking scheme, now let me mark the answers first, okay? Because actually, guys, you all have already done this question. I believe we did this question on a Thursday class. Not last Thursday, but the Thursday before that we did this, okay? So therefore, guys, what I'll do, I'll first mark the answers from the marking scheme because we have already calculated everything, right? Question's name is, guys, Plundle Corporation 448. Okay. First of all, guys, potential gain or loss on disposal. Okay.